Tesla is flat today, and while the market is selling off, this is looking pretty damn good. As of now, this weekly BX trender for the first time since August is showing higher lows. And we have yet to confirm this. We still have one more trading day within the week. But as long as we don't sell off tomorrow, this could confirm the bottom on Tesla. Now, please understand, guys, I only have a 62% win rate. So when I say that this is an indication of the bottom, it doesn't mean that there's 100% chance that this thing is going to bottom. If you're looking for somebody to tell you with certainty what is going to happen, I'm not that person. What I focus on is trading probabilities with proper risk versus reward and using proper position sizing. I treat this like a profession, not somebody who's here to snipe every single entry and exit unrealistically. Now, where Tesla is showing a ton of strength, like we said, is this BX trender, showing a lot of buying pressure. And the last time we saw price pull back into a smart money zone with this type of accumulation was back on the 22nd of April. And from there, we have ran about 243% in 259 days. The reason that these smart money zones are so strong is because you're looking at getting into a stock at an 80% discount, not 80% on the shares, but 80% from low of the range to high of the range. And this is very important because institutions are not going to overpay. Unfortunately, the people who were probably buying Tesla at $442 up to $500 were not institutions, they were retail. And in most cases, 80 to 90% of the time, retail traders lose and they don't make money consistently and they don't make money long term. And that's normally because they're doing, first of all, they just don't have a strategy, right? Even like not the best strategy can make you a shitload of money. 62% win rate over thousands, 3,000 trades in the past 3 years. We're not here hoping that things are going to work. We're here to play a strategic system over the long term. So that's the first thing. The second thing, well, first thing's having a system. The second thing is using proper risk management. Too many of you guys, whether you're traders, investors, whatever you're doing, you've got like 80, 90, 100% of your capital in some trade or in some investment that you cannot hold on to for the next 12 years, but that you might not need the money for a little bit, but you're not expecting to not actually touch that capital for 5+ years. And therefore, you are too emotional to every reaction that happens day to day. And so the more that we can pull our emotional attachment to the market, to what our portfolio is saying, to CNBC and all the other noise out there, the better traders we can become, because we need to be emotionally regulated if not only we're going to survive, but if we are going to thrive. And understand, thriving, like I wish I had a massive whiteboard. Thriving, $4.5 million in profits since 11/5/2023, and we're better than maybe a coin toss when it comes to our accuracy. Now, getting back to this setup, you can see that the smart money zone held to perfection. We bounced right off of $220. If you guys want to learn how to draw all of these institutional sell zones, buy zones, and smart money zones, go check out our free course on Smart Money Mastery. The link to that and all of our other free courses will be down in the description. And you can see that this actually works to the downside as well. When we have bearish structure and price is making lower highs into lower lows, this is a clear indication every time that price pushes into the smart money zone that we're normally going to reject. But the same can be said when we pull back into a bullish smart money zone. In most cases, we're going to bounce. And the more important aspect, I feel like I just have to keep hammering this into everybody's head. The more important aspect is that if this does not happen, which can definitely occur, then the risk versus reward is there. From where we are now up to equal highs, which could happen in the next 3 to 7 months, is a 65 to 70% return. From here to the BX making a lower low is about a 10% loss. So that means, imagine that we have a coin, and let's not even say that we have a win rate of 62%. Let's just say we have a win rate of 50%. But every single time it's heads, I win $700. Every single time it's tails, I lose $100. Who would not sit here and flip that coin all day? You wouldn't cry if you got tails. You wouldn't say the game is rigged if you got tails. You wouldn't get mad if you got tails. You wouldn't triple down, quadruple down, 5x down and pull leverage because you got tails once or twice. You would understand that it doesn't matter if I get tails 1, 2, 3, 4, maybe even 5 times in a row, as long as I can continue to flip the fucking coin. And that is the most important thing here. And I feel that I have been spending so much of my time in the past couple of years trying to obviously give a realistic way of how trading and managing a fund should look. But I think that I need to be even more aggressive in this pursuit because there are a lot of people who did really well over the past 4 years. And I've been doing this for 10 years, right? Like I traded not just the Biden up and to the right, but I traded Trump, tariff war, trade war, 2016 to 2020. I've traded COVID. Like there are people out there who have traded more than me. But if you think the next 4 years of trading and investing is going to be an easy ride like it has been for the past 4, you are sadly fucking mistaken. And at the end of the day, you could say, I'm done. I'm going to walk away. I'll wait till Trump's out of office. I'll wait until whatever. But the truth of the matter is, if you can't make money in this market, then you can't just rely on market conditions being the absolute best, and therefore you will never get where you want to go. And so if I'm following my strategy, there's a 62% chance that I'm going to win, which isn't a lot. But there is a 100% chance that I will never get what I fucking want in life if I don't try. And there are too many people who have too short of expectations. There are people who have unrealistic expectations of this. There are people who have too short of a time horizon. And that is why most people ultimately lose. And so if you're trading Tesla, if you're investing in Tesla, no matter what you're doing in the market, you have to be patient. You have to. Because the easiest way to get your money ripped from your hands is by being impatient and by being emotional, and more importantly, trying to chase not just perfection, but this is the real thing. You have to stop trying to avoid pain. The avoidance of pain in our lives, not just trading, is what will lead you to the saddest life that you could expect. If you're not good with pain, you're not going to be good in the market. So you have to learn to get around that. Now, at the end of the day, Tesla's looking pretty good here. Could Tesla break 230? Of course. But we'll see what happens. For now, I've got my bots loaded. I've got my 2026 and 2025 calls. Depending upon what happens this Friday, I may average down. But the message today, if you are here, I don't mean just in our community or just in our circle, but I mean if you are a participant in the market, buckle up. Remove your thoughts of what professional trading is and start thinking like a fund manager. Stop thinking that every trade is going to be a winner. Stop thinking that you can go out there and just make money effortlessly, and understand why this is so hard. Stick to the program. If you guys want to learn our entire strategy, literally, I have 11 courses, every indicator, everything I know about trading in our free library. You can take every one of these courses. You can learn everything that I teach. But most people will still fail. And it doesn't have to do with indicators. It doesn't have to do with market structure. It has to do with the ability to stick to the plan. Thank you guys for all the support. I'll see you tomorrow.